The JSE is under pressure this morning as the rand has been unable to regain the losses against major currencies. The COVID-19 variant Omicron is still topical among investors, but the decision by the OPEC PLUS meeting of oil-producing nations to ramp up output has been widely welcomed. To talk more about this and other market developments, we are joined by Matete Thulare, Head of Forex Execution at Rand Merchant Bank. Matete, good morning. Let's look at what is expected to drive the rand and JSE performance today.
Good morning, Hugo. I suppose we will be eagerly anticipating the employment numbers out from the US later this afternoon. But just to backtrack a bit, as we open this morning, we're obviously expecting a bit of a mixed open on the JSE, although US stocks have recovered somewhat, some of their recent losses, and mostly some of the Asian markets are obviously trading higher. We saw the likes of 10 cents, nearly 3% lower this morning, which will weigh on shares like Naspers and Process. But obviously the rand has weakened overnight as South Africa's daily cases of new COVID infections pushed through the 11,000 mark that we saw last night. And we are seeing that the JSE is sitting relatively at high levels and also at high multiples, heading into this fourth wave as we've been expecting. Over the past three waves, the SA domestic sectors have underperformed and the offshore earners have tended to show more resilience. Now, nervousness is still high in this market, and there is still quite a lot of risk and uncertainty, and stress indicators are quite elevated, and you are seeing even the likes of the volatility indexes also pushing higher. But I suppose when you just look at the rand market, I mean, we have been trapped in a 1575, 1606 range for the past 2 days. And when we just look at some of the data since 1990, we find that on average, the rand tends to weaken in the early part of December before we aggressively strengthen from the 20th of December right into the early part of January. I mean, the rand has appreciated 66% of the time. Now, this is 20 out of the past 30 years. So hopefully that trend can continue into this year.
We're taking a look at retail. Foschini has acquired Quench to improve its online shopping and delivery offering.
So that's quite an interesting one. I mean, obviously, Foschini has been on quite an expansionary drive. I mean, just earlier this year, they did announce plans that they want to open up 1,000 new stores in the next 3 years. And, obviously, yesterday they have come up with an announcement that they are entering into a deal to acquire the online shopping platform Quench. Now, Quench, obviously, they are a shopping and distribution platform that was established in 2016, where they provide consumers with groceries, liquor, restaurant and bakeries. That's what their main business focus is. And they have said that the acquisition will help Foschini cement itself besides the major brick and mortar, but also they will play an online retailer, role as well in Africa. And obviously the addition of Quench to the business will give it access to reliable, quick delivery across South Africa. But also, when you just look at Foschini, I mean, they are trying to really grow their online presence and turnover to the extent that they've got what they call TFG Labs, which is the group's technology division that is spearheading this digital transformation. I mean, it's not only Foschini that is doing this. So quite a lot of the retailers are starting to plug themselves into the online retailer platform. And we are seeing quite a lot of them, following in the likes of Naspers, where they have delved down this road.
And Capitec has raced ahead of Standard Bank to become the second biggest bank in South Africa. Tell us more.
Quite an interesting announcement. I mean, obviously, what is happening in the market at this point in time, I mean, Capitec, which was founded in 2001 by the investment holding company PSG, and it was listed the following year on the JSE. They've had humble beginnings in the banking space for years. I mean, this has been dominated by the big four banks locally: Standard Bank, Absa, FNB, and Nedbank. I mean, already we are seeing that Capitec has an active client base of about 16 million customers. And I mean, they remain a market favorite amongst already the foreign investors. They are showing that they remain a growth stock, and they've got really strong and sustained top line growth, which has, translated in quite healthy profits over the past couple of years. And also, I mean, just their business and their JVs that they formed partnerships with a range of brands to cater for their existing client needs. I mean, you can just look at it that they are already, providing finance for home improvements, such as with retailers such as CTM. They are also having a joint venture with the likes of Vehicle Finance, We Buy Cars, and obviously over 300 dealerships, and also the likes of MediClinic, where there's medical treatment. So the company did experience a setback in 2020 with the COVID-induced lockdowns and subsequent slowdown in the South African economy, but it has rebounded quite strongly, which obviously demonstrates the resilience of the business model of Capitec, and that's why we are seeing them where they are at this point in time.
And finally, Matete, what are the implications of the OPEC Plus as it agreed to go ahead with the oil output rise? Pressure by the US seems to have won over Omicron virus scare.
So Saudi Arabia, Russia, and all other leading oil producers, I mean, they've decided that they're going to stick with plans to increase the supply in January, despite the recent plunge in prices, which has been driven by fears of a new glut. I mean, already we have seen global oil prices falling more than 20% since the latter part of October. Now, Brent crude futures, which is the global benchmark, that has soared about 70% since the beginning of the year. But it's began falling in November, when obviously the United States and other major oil-consuming nations have said that they're agreeing to release 1 million barrels of their strategic reserves to try and cool down the prices and obviously prevent a further boost to inflation. I mean, the whole world is now worried about inflationary pressures, which is the same measures that the U.S. Federal Reserve has been talking about now. So OPEC Plus has said it will continue to take stock of the pandemic, and obviously will monitor all the developments that are happening, and they stand ready to make immediate adjustments if required. And as such, they've scheduled their next meeting for January the 4th. So then we'll see whether they will actually increase further supply or push back.
Head of Forex Execution at Rand Merchant Bank, Matete Thulare, thanks for your time this morning, giving us an update on the markets.